Hey guys, it's Johnny with Actsphere Insurance Group. We're going to be talking about homeowners insurance 101. If you find value in this video, give it a thumbs up and don't forget to subscribe. Let's get into this. All right guys, so let's go here. This is going to be a high-level overview. What we have here is the dwelling aid coverage, which simply means if the house was completely destroyed, this is how much the homeowner's insurance company will pay. The insurance company will pay out. So based off of this example, let's say the house is insured at $300,000, and this $300,000 is solely covering the structure of the house. The insurance company, in this case, would pay out $300,000. Now let's look at other structures. Other structures is anything outside of the home. So that could be a fence, that could be a pool, that could be a detached garage. So anything outside of the primary structure is considered to be other structures. So in this case here, we have $30,000. And so the insurance company will pay out $30,000 if something was to happen to an other structure of that property. Let's continue here. We also have personal contents. Now, in this case, personal contents is anything, I like to say, inside the house. So if you take your house, turn it upside down, for the most part, anything that will fall out is considered personal contents. So that could be your furniture, it could be your clothes, your shoes, your appliances. Those things are typically a part of the personal contents of a homeowner's insurance property. And so in this case, we have it insured at 50% of the dwelling aid coverage. And if you didn't notice here, all the underlying coverages are typically a certain percentage of the dwelling aid coverage. So with other structures, that's 10% of the dwelling aid coverage. With personal contents, it's 50% of the dwelling aid coverage. So personal contents, your furniture, your appliances, shoes, clothes, curtains, things of that sort. If anything was to happen due to a fire, wind, hail, hurricane, theft, vandalism, the insurance company, in this case, will pay out up to $150,000 in cash to have you fully indemnified. Now let's talk about deductibles. And in my opinion, I believe this is one of the main pieces when it comes to homeowners insurance policy. I'm gonna explain why. This right here, in the event that you have to file a claim, you will have a deductible. And that deductible is going to determine how much you have to pay out based off of that claim. In most parts, in most cases, based off of where we're at, in the greater Houston area, you're gonna either have a 1% and a 2% deductible, and sometimes it could be higher. But for the most part, most folks have a 1% and 2%. So let's just say, for the sake of this illustration here, your all of the perils deductible is 1%. Johnny, what is all of the perils? Great question, I'm glad you asked. That's going to be your fire, theft, vandalism, and any water-related claims that you have to file. So that could be a pipe burst, that could be a seepage leakage coverage, and I'm going to talk about that in a few moments. But let's just say you have an all other perils claim, right? Fire, theft, vandalism, or a water-related issue. In this case, you have a 1% deductible. That 1% is of your dwelling aid coverage, which is $300,000, and that will put your deductible at $3,000. This is the dollar amount that the insurance company would expect you to pay. You would have to come out of pocket $3,000 in the event that you have an all of the perils claim. Now, let's say if it's wind, hail, or hurricane related. So we have wind, hail deductible, which in most cases will always include your wind, hail, hurricane. So in the event that something like that happens, let's just say, for the most part, most individuals have a 2% deductible based off of being in the greater Houston area. So let's say you have a 2% deductible. That 2% would be of that $300,000, which will put your out-of-pocket expense or your out-of-pocket cost that you will owe or have to pay in this claim situation, $6,000, and the insurance company will pay the rest, which means they will pay up to $300,000. You just have to come out of pocket $6,000 as it relates to a wind, hail, or hurricane issue. Now let's talk about scheduled personal property, also known as personal articles insurance. Hey, so I talked about personal property earlier, or personal contents earlier, which would include things like your furniture, your shoes, your clothes, your appliances, things of that sort. I talked about that earlier. Now, there are some things that personal contents will not cover, and those things will need to be scheduled on your homeowners insurance policy, which would include things such as jewelry, fine arts, money, firearms, etc. So this is super important. Most people are not aware that their homeowners insurance policy will not cover certain items in their house. So I always recommend that if you have anything such as what you see here, reach out to your insurance agency and have them go ahead and schedule it to your policy just to be safe. Hey guys, this is it. This is super important, endorsements. Let me first say this, all insurance policies are not created equal. And in some cases, there are certain carriers or certain policies that include most of these items on a standard policy. But there are also cases where you have insurance policies that do not include these endorsements that you see here. And if it's not included, you want to make sure you get with your insurance company or your insurance agency and say, hey, look, let's make sure we have these coverages. The first is replacement costs. What does this mean? I talked about personal contents earlier, right? That's your furniture, your clothes, your shoes, your appliances. So let's say, just for the sake of this illustration here, let's say, for example, there was a major loss and you lost your furniture. And your furniture cost you about, say, $10,000, but you purchased your furniture about 5 years ago. With replacement costs, the insurance company will come in and say, although you purchased the furniture 5 years ago and you paid $10,000 5 years ago, we're gonna pay you $10,000 today so we can completely indemnify you and pay you out the cost of what it was worth. So you wanna make sure you have replacement costs on your personal content coverage. Also, foundation coverage. There are some things underneath our foundation, such as pipes and things of that sort. In the event that something happens where the insurance company needs to fix something that is related to a peril, keep in mind, insurance only covers perils, not wear and tear, not standard or normal wear and tear. It has to be a peril. So in the event of a peril due to the foundation, the insurance company will come in, they will take care of the foundation issues and fix the immediate problem that caused that foundation issue. Also, we have water backup. Let's say there's some type of water backup issue in your house. Typically that will be in your kitchen or your bathroom or your laundry room. So there's a water issue and it gets all over the house. The insurance company will come in, take care of that issue and make sure they replace the pipes or whatever the issue was that caused that water backup. And then we have seepage leakage coverage. Some carriers do not offer this endorsement. I think this is extremely important that you have seepage leakage coverage or continuous and repeated leakage coverage. What this means is, let's say you have a super slow leak somewhere in your house. The leak is extremely mild, is not noticeable until, say, 3 weeks or 3 months later. With this endorsement or coverage, this will safeguard you in the event that there's a peril that occurs. The insurance company will come out because you have this coverage and they will completely indemnify you or completely restore you and cover that issue. Hey guys, thank you so much for watching this video. Don't forget to smash that like button down there and also subscribe to be able to watch future videos. Again, this is Johnny with Actsphere Insurance Group.